Welcome back. There's shares of Twilio right there, up nearly 3.5%. The stock initiated today overweight as Wells Fargo. We wanted to do it as our call of the day because when I pressed, the investment committee yesterday on stocks they were looking at, Joe said Twilio. Now it says outperform, overweight at Wells Fargo, and you bought it.
Bought it yesterday.
After the show.
Bought it yesterday afternoon. Guidewire Software is the name, emerging software that I had been in. I sold out of Guidewire Software, put the money back into Twilio. Let me explain a little bit why. I love the emerging software theme. I like the SMID, small mid-cap space. Twilio fits in that. One of the things that's very compelling to me is we've seen Twilio, very surprisingly, come out to 2020 with a really strong start. And given the expectation, Scott, around earnings, it should not be performing as well as it is performing. And that gives you confidence and incidence that the negativity that surrounded this stock since Q3 of 19 is kind of passing. They had the customer billing issue, which they announced in Q3. So they had to give one-time rebates to their customers. That lingered into Q4. We know the comps are going to be incredibly difficult when you measure revenue growth in Q4 versus Q4 of 18. Okay. That was astronomical, 80% versus somewhere around 55%. So I think all that negativity has been priced in, and now it's time to focus on what this company is. And it is a unique opportunity to have that transformation from software into the cloud, the 4 vehicles with which we communicate. No one offers a better solution than Twilio, and that's why I got into the
So they go 155 on the target. Don't call it a comeback is the highlight of the note. Quote, Twilio shares hold some of the greatest upside potential in our coverage universe. That's high praise.
Yeah. Very high, but we believe it. We bought the stock in January, early January. We've been watching it for some time. It came down around 30%. It was expensive. I remember, Joe, you talked about it last year as a name that you liked, and then I think you got out of it, and we were waiting for the decline, and then there was the accounting scandal. We looked into that carefully, and communication as a platform, it's an amazing new world. The fact that you're getting information about your appointment on your cell phone, whether you want it or not, for your dentist or your haircut. This is Twilio's forte, and they aggregate all of these different platforms in a way that has never been done before. And this is just an enormous new world for them. They are number one in the field. Everyone is far behind. And even though they're an expensive stock, we feel there's enough growth in this industry and this market to sustain the stock for the next few years.
Do you worry that it's an investment year for them and that might depress margins? That's the only kind of consideration.
And can I see the intraday, by the way, as we're having this conversation? We're looking at everything but that. Thanks.
Sure. So I think that's an issue. What we did is decided it was too expensive. Here's a price that we would buy it at. We've kind of set our target. It hit that. We reviewed everything that we had learned about it, and we decided, January 6th or 7th, this is the day. Here we go. And we didn't make it a huge position, but and if it comes down because of margin pressure in a tough quarter, we'll buy some more.
Maybe the feeling, I guess, is that you've already think it's had that reset, right?
Yeah,
the stock has had a rough 6 months. It's down almost 20%.
The negative expectations, in my view, have been priced in. Jeff Lawson and the management team seem to be on top of this. And I would expect they will define a strategy that will eventually lift margins. You're correct on the margin story, but I think the margins will recover and lift, and that's what I'm aligning the position long accordingly for.